How's everybody doing? Party people in the house say, whoa. Good to see everybody. I'm making some money these days, which is excellent. I like making money. I told this story on Twitter, but yesterday my 7-year-old daughter asked me how I was doing, and I said, not great. I go, stock market's bad. And she goes, oh, that's not a big deal. It's just work. And I said, yeah, work's, kind of important to me. So it's not good when it's bad. And she goes, oh, it's not like you're losing money or anything. I said, that's exactly what's happening, actually. Most jobs, that's not the case. But my job, it is. Anyway, she's pretty cute. So I am here to talk about ADTH, which this is a very timely YouTube. Today might be the only day you can act on it. And this idea was completely ripped off from Mr. Andrew Walker, who did an entire blog post on this. I will link that blog post now. And he goes into great detail about, there he is. You going to call up, Andrew? I'm inviting Andrew to call in, and I can do a Q&A with him. We could talk about it together. I just don't know how good the sound's going to be, but we could try it. After I'm done talking, you should read Andrew's blog post. Andrew's blog post basically goes into great detail about why he thinks the company is undervalued. Okay. What I want to discuss is big picture, what's going on right now, and why I find this so interesting, this situation so interesting. So ADTH is an ad company, ad tech, and it was a SPAC a few years ago, and it was a disaster SPAC, as all SPACs have been, and the stock went to the mid ones last year, and it has, depending on how you analyze it, it has about $1 in net cash. So it was basically trading very close to no enterprise value for much of last year. There's a 40% holder, which is a hedge fund, private equity firm, HIG, and they own the company before it de-SPACed. And then you also have a bunch of other chunky holders that are involved, 9% holders, and the original SPAC sponsor owned 20% of it, but they distributed their stock. Anyway, it's not that important, okay? The stock started ripping in the first few months of this year, and they reported earnings the second week of March. And after they reported earnings, the stock went to as high as 4 before kind of smoothing out around the 325, 330, whatever, that range. They announced on April 1st that they were being acquired by a private competitor for $3.21, which was effectively a take under or a no premium takeover. And in the release, they said there would be a 33-day go shop period where they can actively solicit other bids for the company. The stock traded over the bid, a few pennies, 330, 325, whatever. It slowly drifted down to below 321 until Andrew wrote up his blog post, which sent it back to 325, 326. And now it sits, as we talk, it's 323 by 324. The deal is at 321, and they filed the preliminary proxy early this week on Monday or Tuesday. And yesterday they reported earnings. So lots happened this week, and the go shop period ends on Saturday night at midnight. So there's really a lot to cover here. Why don't we start with the proxy? Okay. Now, usually when there's a go shop, you assume the company wasn't heavily shopped, or else there's no point of a go shop. Just so you understand what a go shop means, it means the company is allowed to actively solicit other bidders during a specified time. And if they do get another bidder, the break fee they have to pay to the old bidder, the person they've signed the deal with, I think it's the firm's called Cadence, is pretty low. In this case, it's $6.5 million, which about 2% of the deal. And if they don't sign the new deal during the go shop, or from a bidder that came during the go shop, it goes to $13 million. And they also can't actively solicit other bidders after the go shop's over. Proxy came out on Monday or Tuesday. And there were two very huge things in that proxy that I don't think anyone's paying attention to, because the stock didn't move. It went up like a penny or two. The first thing is they go through the background of the bid. And you can go read it, as you should. Basically, starting in the summer of last year, Strategic Party A bid stock and cash for the company that they rejected. Then Cadence, I don't even know what the name of the company that's buying them. I think it's, let's see. It is sorry. Cadent. Yeah. All right. Cadent approached them in the fall and bid 100% premium, like $2.90 when the stock was trading like $1.45. At that time, there was also a Party B, Strategic Party B, that's a public company that bid stock and cash as well. And they rejected it and said it was inferior to the Cadent bid. Sometime around, this is like November, it's called November. In December, management prepared 5-year projections for the board and for their advisors. And I'm going to get to that in a minute. In January, the first week of January, they decided to go exclusive with Cadent. And they actually discussed opening up the process to other bidders and soliciting other bidders. At this point, they've never gone out to ask anybody to buy the company. It's all incoming only from those 3 firms. And they decided that it was not good for their business to have an active sales process. It'd be better to do an exclusive with Cadent and then do a go shop after. That was like January 5th or 8th or something. Okay. Over the course of January and February, their stock's soaring, starts going well up into the 2s, high 2s, what have you. And Cadent raises its bid from the $2.90. I can't remember what the first bid was, but I think it was $2.90 to $3. And then finally in March, they go best and final at $3.10. At the same time, the company reports earnings. The stock goes up a lot. And they then get a notification from the FTC that they're under investigation for fraudulent practices or something. That's in the proxy. It shows in the proxy. Cadent and them pause their negotiations for a week or two to study this FTC issue, with Cadent eventually coming back and not having a problem with the FTC issue at all. They asked Cadent to up their bid because it's trading above 310, and they bid 321, which was basically the last sale. I think last sale was like 322, but they said they'll only do that if the 40% holder gives up $3.5 million worth of stock, which is rather odd since the whole deal is like 325 million market cap, and the EV of the deal is like a 225 kind of thing, 220. Okay, but they wanted $3.5 million forgiven by the majority holder, and the majority holder agreed to this. So you have to ask yourself, what is going on there? Why didn't the majority holder just sell this for $3.17 and everybody gets $3.17 versus $3.21 and they're willing to give up $3.5 million? Now, the cynic in you would say it's because the business is crap. They want out and they're fine with, giving up the $3.5 million. But wouldn't the board be fine with them selling at $3.17 then? Now, the bull in you would say they didn't want to take under for appearance purposes. It was important for it to be sold for last sale. And because they had this robust go shop in place, this bid doesn't even matter. This is what they call a stalking horse bid, where this buyer had exclusivity. They're going to sign the deal, so they have something to backstop, and then they'll now go aggressively out to market to get the true fair price for what this is worth. And the $3.5 million is irrelevant because it's not going to be important when they get a new bid. The cynic in you would say, if this is so cheap and Kadant is stealing this, why do they even care about the $3.5 million? Why didn't they just pay up more than 321 in the first place? Let's talk about what this is worth, or what I think this could be worth. So last year they did 20 million in EBITDA. They had 10 million in stock-based comp and 5 million of CapEx. Okay, to generate virtually no free cash flow. They did 20 million the year before in EBITDA, and the year before that they did like 40 or something. And the top line was basically like a no growth business for 2 years. Okay, when this de-SPACed, they thought this was going to be a fast growing, sexy media company or advertising company. When they issued guidance and when they put out Q4 earnings and they issued guidance, Q4 earnings were very, very good. I think they grew Q4 earnings by like 15% year over year, and EBITDA soared, and it really looked like they're on an inflection point of generating real free cash flow in the years to come. They guided for 2024 EBITDA at the midpoint of the range. They guided to a $27.5 million number. Excuse me, like a high 20s in EBITDA versus the 20 million that they just did. If you assume they sold the company for a $220 million enterprise value, and they're going to do high 20s in EBITDA this year, at face value, it looks like they're selling the company at 8-9 times EBITDA, forward EBITDA. And it's somewhat fair, right? Doesn't take into account any synergies. Andrew gets into all this in his blog post. But you also have a lot of stock-based comp. Though for an ad tech company, that's pretty low as a percentage of EBITDA or revenue. So then the proxy comes out. And the proxy, they have management projections. They were made in December, and I do not believe they've been updated. And they have 2024 EBITDA at 42 million versus the 27 million they guided to a few weeks ago. And they have 2025 EBITDA at 60 million. And they have top line growing at 20 to 25%. Those numbers are outrageous. They're insane, right? I mean, if this company is a $220 million enterprise value right now, and they're going to do 40 million of EBITDA this year and 60 next year, right? It's trading at 5 times this year and like 3.5 times next year. And that's before synergies to any buyer. The synergies are massive, right? You strip out at least $10 million of public company costs, CEO, CFO, whatever. A lot of that stock-based comp will go away. And you're left with a free cash flow machine. Further, the business appears to be at an inflection point. So they reported earnings yesterday with no notice. And of course, no conference call. You don't do a conference call where you're in a cash bid and you're in the middle of a go shop period. The earnings at face value aren't great. Revenue grew like 6% versus the double digits it grew in Q4. And EBITDA was flat year over year. Now, Q1 is very immaterial to this company. All the numbers are half the size of Q4. Revenue's half the size. There's, like I said, there's usually no EBITDA. And if you look through it all, it's not very concerning. I went back through Q1, Q2, and Q3 of last year, and the year-over-year revenue growth fluctuates wildly. It went from like down, 6% in Q1 to down 15% in Q2 to up 6% in Q3. There's really no rhyme or reason to how it is on a quarterly basis. It's not telling what the trajectory will be for the full year. Further, when they guided revenues and EBITDA, it was the second week of March, and they already knew what the first quarter earnings were going to be for the most part. So there's nothing that was in this earnings release that's going to make this not worth, a premium to what it's trading at if somebody is interested in this company. There's no red flags in this earnings release, okay? The question we have to ask ourselves is, why did they put out earnings yesterday? when the go shop period ends on Sunday. I looked at the last 6 quarters that are not Q4. So it's only been public for 2 years. So I looked at Q1, Q2, and Q3 of 2022 and Q1, Q2, and Q3 of 2023. And in 5 of those 6 quarters, they report late next week, like Thursday or Friday of next week. One time they reported when they reported yesterday, which was quarter 2 of last year. They reported like August 2nd or August 3rd. Okay. I think that there are no great reasons to report early in the middle of a go shop unless something's happening with your go shop. They're in a signed cash deal. Okay. Usually companies don't rush out earnings when you have no disclosures that need to be made because you already have a deal done. And it's very odd to me why they reported yesterday. The bull in me says that they wanted to get the numbers public. They wanted to get the 10Q out so that it puts that behind them to focus on the real fireworks, which is the go shop and whatever numbers we might get next week through this go shop. Now, how does this go shop work? Okay. I've seen go shops before, and I've never seen it done like this. For instance, there was just a go shop that was successful recently with, I think Andrew has it in his write-up here. Everbridge, I believe, is the name of the company. Let me see if I can find it here. I think I'm almost sure he put it in his write-up here. Yeah, Everbridge. So when Everbridge had a go shop, and you can go read the background of this, throughout the go shop with Everbridge, the buyer was being told what was going on with the go shop, and they were volleying back and forth with the bidder to come to a conclusion by the end of the go shop. So we got a press release at the end of that go shop that the deal was bumped by like a lot, like 20% or something, and that was the end of the story there. That is not the case here. Okay, this go shop is fascinating. With this go shop, they are not going to notify Cadent of any other bidders until the next day after the go shop ends. Okay, it's in the proxy. It's part of the go shop, the way that they negotiated it. So theoretically speaking, right now, Cadent has no idea what's going on in the go shop. And once the bids come in between now or the last few weeks and Saturday night, they will then go to Cadent and say, we have 3 bids, all 3 of these are superior. You guys have, I believe, 6 business days to tell us whether you want to match it. After those 6 business days are up, if they match it, I assume the original bidders, the go shop bidders, have a chance to beat it again. They're grandfathered in as go shop bidders. So even though the date has expired, they're still allowed to keep bidding, and it's still just a $6.5 million breakup fee. Okay. Now, that means come Monday, we might not know anything. Okay. There's no law that says they have to file an 8K that says that the go shop failed. Often they do. Sometimes they put it in a proxy update the next time the proxy is filed. So there was a preliminary proxy filed already, but it's going to go permanent or definitive, in whatever, 10 days. And then they would put in there, we contacted 68 parties, and the go shop failed. They also might put out a press release Monday morning saying that they did get superior bids and giving us what the bid is and saying Cadent has, 6 business days to respond. I have absolutely no idea how this is going to transpire. Okay. What I do know is that if we hear nothing on Monday, it's not necessarily bad news. What is this worth? Okay. if you think that the $40 million EBITDA number is real, going to 60, and you could pull out $10 to $15 million of costs, okay, this business is worth 10 times EBITDA. Either 10 times actual EBITDA or 10 times synergy EBITDA minus, stock-based comp. Either way, you get to that 40 million number, right? 10 million of synergies, 10 million of stock-based comp. They wipe each other out, whatever. At 10 times, it's a $400 million enterprise value. There's about 100 million of net cash. Okay. That's a $500 million market cap. That gets you to $5 a share. It's trading at $3.25 a share. Okay. I am not talking about some small little bump here of 10 or 15 or 20 cents. There is a giant bus you could drive through to where it's trading at now and what it might be worth to the right strategic buyer. What about 8 times EBITDA? 8 times 40 is 320. Add another 100, it's 420. That's $4.20 a share, or a little bit more. Okay, versus 325, a huge premium. Why did they structure the deal like this? The closest I could come up to is that this was the safest way for them to auction the company. They have a signed deal. It is at a big premium to what it was trading at in the fall. HIG wants out. And because the Go Shop is so rich and generous that if they can't get an alternative superior proposal in those 33 days, HIG is fine with taking the bird in the hand. And if this ends up not getting a bump, then I think we were terribly wrong about the quality of the business and about the accuracy of management's projections. Because I think that there will be many bids for this company, not just one person, but multiple parties will come in because it's just too cheap, right? So what were we risking? I see the stock's going up now. Take it easy, guys. There's plenty of stock out there. There's stock for everybody. What are we risking? Okay. This should close in about 60 days at the longest. Okay. It should go definitive. The proxy should go definitive in 10 days. There should be a shareholder vote in 30 or 35, and it should close in a few days after that. So within 60 days, this should close. Okay. I don't believe there's any antitrust risk here. I don't believe there's any risk of the deal breaking for the FTC stuff that was disclosed before they signed the deal. So at 325, when I started talking, you were risking 4 cents above the bid and your time value of money to get to close. If you assume that this should trade at like a 7 or 8% IRR and it takes 60 days to close, you're looking at like a 1.25% discount to the $3.21. So fair value today is probably like 316, 317 with no bid, extra bid. So if it's trading 329 right now, it's 12 cents over and you're risking 4%, right? The reason why I think it's so attractive is, I think it could go for 35 to 50% more than it's trading at right now. But even more so, I think the odds of there being another bidder is well greater than 50%. And all you need is that other bidder to be there for it to go for much more than 321, whether it's 350 or 375 or $4 or 425 or 450. You just need another bidder there. And the fact that the background shows you that they did not shop the company and that there's 2 other strategics that wanted to buy the company, albeit they wanted to issue stock to do it. And the fact that this business apparently is pretty strategic for a lot of companies. So I guess they do non-cookie, no cookie advertising, and Google's going away with cookies eventually. So they're one of the few out there that can capitalize on this. And they talk about this a lot in their last conference call, which you can read. So I don't know. Andrew and I have been completely obsessed about this idea. Again, Andrew was the first one to find it. And yeah, I just think it's so freaking fascinating. So I wanted to do this YouTube mostly to get questions. Andrew can call me up if he wants to now. We can do a Q&A, and if I missed anything, we could talk about it. But when it was before the proxy came out, I tried to sell some stock above 327. This is like a 27% position for me. I tried to sell some stock above 327, and I got almost none off. It was a few days it was above it, 326, 327. When the proxy came out, I bought more at 327. Okay. And then I bought more this morning and last night after earnings. It was trading at 321 for some stupid reason. Now, I'm not selling any here, but it is a good exercise to ask myself, where would I be a seller right now? Because I don't think it's worth, an unlimited option. My gut tells me that in the 335, oh shit. All right. I'll call you back right now, Andrew. My gut tells me that at like 335, I'd be more likely to be a seller than a buyer.
Hey, buddy.
Hey, how you doing, Andrew?
It's so weird. I can look at you on YouTube and on here.
It's like FaceTime, but with other people.
Well, actually, the YouTube pauses when I call you. But yeah, why don't you put me on speaker and tell everybody I'm on the phone and we can do Q&A, or I can just grill you if people can hear you.
Oh, you've already been on speaker and they're already hearing you.
Oh, hey, everybody.
It's good that you didn't say anything saucy.
So YouTube actually freezes when I call in, so I can't see the question or anything. But if you want to do questions, or I can grill you, or what would you like to do?
I want you to ask me questions, and I'll ask you questions. And then if anybody asks questions on YouTube, I'll read them out loud.
So just since you don't do it, I'll just disclose to everyone that I have a position here, obviously. So there's my disclosure. It is a large position. I love this idea. I always loved it. Love it a little less at 330 than 320. But I agree with you. When people are like, hey, what's the topping bid here? Go shops. The Tom Bravo average deal, that was like a 15% bump. I say, look, I mean, when I see the synergy potential here, I know it sounds crazy, but I think there's a chance we could get into the mid fours. We could get into the fives. Like, this is a really synergistic industry. And when you start thinking about the revenue synergy, customer synergy, cutting out all the headcount, like, if you get a bidding war, things could get wild. So I guess grilling you, the weakest piece of the case here to me is HIG, right? That's the 40% buyer, 40% owner who's selling. And I agree with you. It seems like you stalking horse this, right? But the weakest case to me is the buyer, right? The buyer said, hey, we can't sign a deal at 321 without you giving up a little stock. And if this was just such a cheap asset, why wouldn't they just sign the deal at 321? And if this was so cheap and Hig knew they were selling it so cheap, why would Hig ever agree, in the downside scenario where you don't get the bidding war, why would Hig ever agree to give up the 1%? That is, to me, the weakest case, and the thing as a mammoth bull, the thing I struggle with.
So my pushback there, which I talked about a little bit already, is
I heard. I listened to the whole thing. Yep.
I can't. We can't come up with any reason why the board didn't just do 317, which Hig would have been fine with. They would get the same amount of money. Why did the board say no? Let's do 321. Let's make Hig lose this $3.5 million.
Here's why the board doesn't do that. Right? The board says, hey, our stock's at 321. We know the fundamental value isn't there, or we're not willing to bet on this inflection, and we can't do a take under at 317. And Hig wants out. So let's just sign this at 321. We'll get the go shop to protect us. But, everybody thinks there's this stock price is kind of house of cards. Does that make sense?
I mean, clearly the negative here is and I've had people tell me this too, is if this business is on an inflection and it's so cheap, why on earth are they even selling now? Why not wait a year to where, you know, the EBITDA is 60, not 40?
Yeah, exactly.
Yeah. So my only answer, and we'll find out soon enough, is that it is a good time to sell because they had a great Q4 and they have great projections, and they're going to get some benefit for the Q4 and the projections. And as long as they had this very amazing, robust go shop clause, they were very confident that they would get higher bids. You know, that's what stalking horse bids are. They tend not to be the final bid.
Mm-hmm. No, I don't disagree with you, but I do think it is the weakest piece and the thing that makes me the most concerned.
Oh, for sure. And I asked a question to myself before you got on. I don't know if you're comfortable saying it, but it's a nice exercise to say, like, what price should it be now? And when would you, when would you be a seller if it was trading at what price today? What do you think is the appropriate expected value right now for this?
Well, so we can base case it, right? The base case for Go Shops is 5% of Go Shops result in a successful deal, and the successful deal is generally up 20%. So if you base case that, that would be what you'd get about a 60 cents bump, and that'd be worth 3 cents. So I guess your base case would be this should be trading for 321 or 322 on those odds.
I think your article said 10% of those shops get bumps, I thought.
Oh, so the article, this was on academic studies. It used to be 10%, but some of the more, there really aren't a lot of Go Shops anymore. Some of the more recent things suggest that it's more like 5% these days. So if you did 10%, this should be trading at, that'd be 6 cents of value, but then you have to discount a penny or two for time value. So 325. Here's the thing. I think, and you think this is way more likely to result in a successful deal. I mean, you can't look at the past just without even shopping. The company had it goes up to party C or D without even shopping. Like, people are inbounding all the time. If you look at this industry, Magnite, DSP, a few others, they're pretty acquisitive, and their stocks are back. Their stocks are up a lot over the past few months. They've got equity currency. So I kind of think this is way more likely than your average Go Shop. So I'm not going to, I'll let listeners do their own work, but if the base case is 5 to 10% and a 20% bump, I think it is way more likely. And as we've talked about, I think the bump could be a lot bigger. So people can do their own math, but look, if this doesn't work, HSR was filed April 5th, I believe, was disclosed in the proxy. HSR should expire May 5th. I think they have to file by April 15th. I think they probably file early because they think this is going to get waived. I have no idea how this could be an antitrust issue. But if this doesn't happen, we're probably looking at a late June close. Discount it back at about the risk-free rate. This would trade 319 or 320 if this broke. So.
Yeah, I thought 317, 318, but basically, yeah. I mean,
you're probably day one. You're probably right, because all the event people who were here for a shop just bail out as fast as they can. But this would be a very clean merger arb, right? What's the break? Oh, it was a no premium. It was a no premium deal. So what's the downside? The downside is 0. The upside is 321 in a month and a half. Like, that should trade pretty tight.
What there was a party C and a party D in the background. I missed that.
There was party. I had to step into a phone booth to do the call. There was party A and party B. I believe there was a party C. I don't think there was a party D, as I'm going through it in my head. But I'm near positive there was a party C. You can probably control that really fast.
Yeah, it's fine. Doesn't matter. Just the fact there was a party A and a party B and they both were strategic, I think, is a big deal. And then what do you think? We talked about this before, but the mechanics here. Have you ever seen a Go Shop where you don't have to tell the buyer until after it's over whether or not you received a better bid?
That was a great point you made on the YouTube, which I did not realize when I was reading the proxy. I don't know. I'd have to go back through all the Go Shops. I could see how you might not have to, but it almost seems like you would want to, right? Like, let's say you and I, the Go Shop was ending Saturday, this Saturday, tomorrow, which is. On Monday, I would probably want to go to my buyer and be like, hey, there are 4 bidders here. They're circling at a higher price. We just want you guys to be ready, because I'd want the bidding war to get hot and spicy pretty quickly. But it does seem weird that you wouldn't at least give them a heads up on, Monday, hey, we don't think there's going to be any bids, or hey, there's 4 people circling around and the price they're targeting is kind of 420, just so that they could have a counter bid ready very quickly.
There's so much interesting things in the proxy. It says that they're allowed to give confidential material inside information to the bidders, but then they have to furnish it to Cadent as well at the same time. It's like almost so like they're prepared for negotiations and have the same footing as the bidders do come, when the go shop ends.
Which also, now that I think about it, might make sense, because if you were a bidder, like if you're prepared for a really hot and heavy bidding war here, right? If you were a bidder, I wouldn't really love the idea of me coming in and saying 420, and then you saying, okay, cool, we're just going to go run it by Cadent real quick,
exactly.
Like during the go shop. So it does seem like it's a little more likely than not set up for an aggressive go shop.
But as I said on the YouTube and the other example, I haven't studied a lot of these. It's not always done like that. I mean, with the last one I just talked about, Everbridge.
Well, Everbridge is unique because that was shot.
I know, so weird. So weird.
Which is so weird.
Yeah.
So I do like. It's nice to be able to point to a recent example of a one that worked, but that was shopped, and then there was a go shop. Then there was a successful go shop, which is wild to me. It's just wild to me. But
yeah.
All
right. I think we covered everything. What do you think? Did we miss anything?
I think we did great. Are there any questions or anything?
No one's wrote me any questions. That's not a single question out there.
I mean, the reason I know that is, you and I mean, how many times have we talked about? I was in Vegas, and I think I spent more time talking to you about this than I did to Vegas. And then you called me, and my wife was like, "Is this man a crazy person? He's calling you at 9 o'clock at night."
The answer is, I am definitely a crazy person. But yeah, I can't believe you answered the phone. We have such a funny business. You have to answer the phone because I might be telling you something really good or really, really bad.
Well, I'm not gonna say the stock. You can probably figure it out because we DM'd about it earlier. But last night, a guy called me at 5:30, and I just thought it was just a random thing. He was like, "Did you see this?" I was like, "What?" And he was like, "There was a 13D filed on this company. They got a bid." So things can come out of nowhere. You never know.
That's a good example of that one. Exactly. Anyway, I'm sure we'll talk about that stock one day in the future. But anyway,
I have a feeling I will be talking about it in the near future. I can't believe nobody has questions. The reason I called in was that I thought, you've got the 4 smartest viewers on YouTube.
There's 31. There's 31. This is a big, this is a very that's a very robust viewership for me. 32 people.
I'm gonna have to give up my podcast and just I'm gonna be the key dial in. Who did Howard Stern have who dialed in a lot?
Maybe we could merge. I think your empire is worth a lot more money than my empire, though.
Maybe. Cool. All right. Well, we're at some point next week, maybe next week. I hope next week, just for my own sanity, because if we hear nothing into next week, and I'm just sitting here like, is this a bidding war or is this dead? I'm probably gonna go.
So speaking of that, I'll go in on that. I do think if it's dead, and given how this is not a traditional go shop, like. They clearly know market expectations are that there's a good chance of another bid. Trading over the price and all this stuff. I do think they will AK it and say that they contacted 84 parties and ultimately never got a bid. I think if we do not get that AK on Monday, I would interpret that as rather bullish. That's just my personal opinion.
Yeah, I think you're right. Now, that does not mean like you could have a scenario where they get a superior proposal on Saturday, and then they negotiate for 2 or 3 days and ultimately decide not to go with it for some reason. So just because you don't get it doesn't mean like, let's send this to $1,000 or something.
Oh, no, I'm not saying it's done deal with no 8K.
Yeah.
At all.
But I do agree. I mean, just based on how much I've asked them questions, and I think they know people are thinking there's a chance of a successful overbid here, and they probably just want to put it to bed if it's not happening.
Because there's no harm in putting it to bed. Put it in 8K, it's one paragraph, and that's the end of it.
It's actually it's better to put it to bed, to be honest with you.
Yeah, that's why I think that's what they'll do. So anyway, it's gonna be a fun weekend, dude. Anyway, I told Andrew if this ends up getting if this ends up going, I actually didn't tell you how much that to go for, but if this does go in the 4s, I will change the boys' names to Andrew and Walker.
I don't remember that, but I'm going to hold you to that. I think you just made, nothing on this is investing advice, but I think you just made a legally binding contract. Sam and Leo are going to be, they're going to be a little freaked out when you come to the
I do have to talk about it with my wife, though.
Well, you always promise ponies too, though. Every time you promise a pony, it doesn't work.
It doesn't work.
Really good.
The ponies never work.
You have a pony here, but maybe you can give me a pony if you can't rename your kids.
Ponies never work, and if I say we're going to Las Vegas, it never works. So I definitely won't say we're going to Las Vegas if it goes for over $4.
That's the superstitious part of me is a little scared now because I was in Vegas when the Go Shop bid should be like clearing up.
Yeah.
I was in Vegas 2 days ago, so maybe I jinxed ourselves here.
I think we're good, Andrew. All right. Thanks for thanks for
having me on.
Bye. All right, let's move on. Sorry, that was very long, 40 minutes. I want to talk very briefly about AY and about JWN. So AY, I actually forgot to mention in the last YouTube. I've talked about it many times in the past. It's a renewable energy company that's controlled by AQN. I own both AQN and AY. You can go back to previous YouTubes for it. It was Reuters reported, I think it was Reuters reported yesterday that AY or Bloomberg, AY is in advanced discussions with a private equity firm to be acquired in the coming weeks. No price listed or anything like that. Obviously very good news. The only caveat I'll give you with AY is that it's not a strategic that's buying them. It's a private equity firm. And the seller, which is AQN, is kind of price agnostic here. They need to get out of this. They need to delever. And there's also no real point of them owning this equity stake in AY. So I am not expecting a robust price here. It could be 23, it could be 24, it could be 25, it could be 21.50. So I'm holding my position. I'm waiting for the deal, but who knows what the actual price will be. Now, JWN, which I just did a long YouTube on last week, which I recommend watching if you haven't. That had a Reuters article that's saying that Sycamore is amongst the private equity firms vying for JWN. Obviously very bullish. Now we have name to go with the story. It says that it's going to take several weeks to finalize. If it gets finalized, to me, several means 4 to 8. I mean, they could have said a month. They could have said a couple months, but they said several weeks. They report earnings May 31st, around then. So they might try to do it by then. I love JWN. I like it mostly for the options positions I put on, which you really can't get on anymore. Less enthused about owning the common, though I do have a nice common position in that as well. But I just wanted to update everybody with the news from yesterday there. And I still have another idea I really like that I'm still acquiring that I can't talk about yet. I hope to be able to talk about that in the next few weeks. And I think that's it. Oh, Magnachip reported earnings, piece of crap. Nothing new there. The stock's flat, luckily. That's the same story. If there's going to be an inflection with Magnachip, it's going to be many months from now. Any comments on WOW? Wow. It's kind of funny you asked that question. My initial comments on WOW is that this one fits very much like all the other ones that I like. It's another controlling shareholder trying to take it private. There's a tremendous amount of debt on this company, so it's kind of an equity stub, and you can pay a lot more than what they are bidding for to get this over the finish line and steal it. Interestingly, in the WOW letter, they do not say that they are going to allow or demand a majority of minority vote. So they definitely want to steal this, and they don't really care how they do it. But often when you steal one of these companies, you still get 100% premium, right? I'm not saying that's going to happen here, of course, but you could still get a very robust price and still have theft and still have lawsuits after the fact and appraisals and stuff. So there'll be more to say on WOW in the future, but I definitely think it's interesting. It's just a very rich time to be investing in special situations right now. There's just a ton of them out there. I think Spexits Media Group would be a good thing. ADTH came back down. Obviously, somebody was like, what the hell is this thing doing at $3.29? Now we're back to $3.23 by $3.24. There you go. All right. Have a great weekend, everybody. Thanks for tuning in. I'll see you next time. Bye.